Market Outlook webinar with me, David Jones, and Aondo Markets. This is a webinar we do every week on a Wednesday lunchtime, and it breaks down into a couple of parts. If you're watching the recorded version of this, it was held live on Wednesday, the 28th of March, at 12:30 in the afternoon. Let me just put the risk warning up. So what we do, we look at, over the next half an hour, we'll look at the major markets. So we'll look at stock market indices, euro, pound, gold, and oil. See really what's been happening over the last week and some of the big levels to watch in the days ahead, where the opportunities might be. Clearly, I think it's going to get, what day is it today? Wednesday. It's going to get, you'd expect, a little bit quiet ahead of the Easter break. So we may not see masses of volatility over the next couple of days. But let's take a look at some of the levels. What we also look at during this webinar is a bit of trading strategy. And I think this week, what we're doing, we're going to look at identifying and trading trends. I mean, I think we all know when we first start trading, we all get banged into us. The trend is your friend, but plenty of people trade against it. You know, so we'll look at some simple ways of identifying trends and trying to trade with the trend. Oh, I've had my screen paused and I haven't been showing the risk warning. Let me just unpause my screen. So that's up. So we'll look at simple ways of identifying trends. I think markets are interesting at the moment, and there's all sorts of things driving markets. We saw, you know, the end of last week, we saw pressure on the US dollar because of the threat of a trade war. You know, we heard about these tariffs being imposed by President Trump on China. So the dollar was under some pressure towards the end of the week. We've seen stock markets volatile. We're going to start off looking at the S&P 500 because I think it's really interesting what we've seen over the past week in US stock markets. Then we'll have a look at some of the others. Okay, so let's flip over and get going. So this is Aondo's trading platform, Trade Hub. So I've maximized the chart view. Why this is interesting, I think I said last week, I think if there's one market to watch at the moment, it is the US stock markets, because clearly they're going to determine the direction of the rest of the world stock markets. And because of that massive volatility that we saw sort of end of Jan into Feb, where we saw markets fall off a cliff. And I said, I felt that after such a big move like that, and after having years of markets grinding their way higher, you know, I thought, well, actually, it's going to be a long time, well, a relatively long time until we see fresh all-time highs again. And I was surprised how far the bounce back went. But what is really interesting is what's happened over the last week and a half. You know, just to pick up on some big levels, first of all. And if you've been subjected to these webinars over the years, you know, you'll know what a big fan I am of these major levels. Let's chuck some squiggles on as well, because people love the squiggles, don't they? So let's put on the usual RSI. What have we got? 14-day RSI. Let's make it a 10-day, 2-week RSI. Let's plonk that on. There we go. It's really interesting, the move over the last week and a half. We had these lows, these big lows during the sell-off, where the S&P crashed down to 2530 on this day here, rallies, then comes back down to it again and tests and holds, and then sets up, you know, what is it, nearly a 300-point move higher, 270-point move higher before the market is sold off again. So clearly this is a big area. You know, 2530 was where the buyers finally stepped back in after this market collapsed during Feb, the first couple of weeks of Feb. And the move we've seen over the last week, you can see, okay, we've not got back to 2530, but you can see again, we're seeing some buyers come back in. So, you know, the trade here, I mean, it's a trade with a wide stop if you're going to take it, but you know, the assumption is, well, maybe we should see a recovery. Maybe we should push back up to 2800, you know, from where we're trading now. So maybe from an S&P point of view, there's 180 points upside from here, with stop losses the other side of 2530, tying into the argument that maybe we are due another move higher, another recovery, is the RSI. You know, we've gone oversold on this move down to here. We were oversold back here last time we dipped down to this level or crashed down to this level. So it does suggest that maybe we're going to see a recovery from here. So that would be, I think, the first scenario, I think, for stock markets, a bit of a bounce back from here. Of course, you know, we need to have alternatives. So if we see 2530 broken, and famous last words, I don't think we'll see it in the next couple of days because the market should be quiet. But if we see 2530 broken, I think that could be quite a momentous event, because we had, you know, such a big sell-off in Feb, and that level held. if that level gets broken, there's a lot of people going to be wrong again. So I think we could well see quite a sharp sell-off from this area. So 25.30 on the S&P is the big one to watch. That's the big picture view. But for my money at the moment, I would be tempted to be a buyer of dips, because we've come crashing back, not crashing back. Well, I suppose that's a bit of a crash, mini crash. We come back to this level. Let's take a look on the hourlies and just pick up on some short-term levels. Then I think we'll have a look at the Dow, and we'll have a look at some of the European indices as well. I think it's interesting, again, on the hourlies, I suppose if we were going to plonk a trend line on here, and we are talking about trends today, so we'll have a look at this in a bit more detail in a minute, but we've got our downtrend. You could argue, well, it is, that the trend is still down from March the 13th. So we are still within this 2-week downtrend. So again, arguably the more disciplined approach here is to wait for that trend to change before buying back in. So you may want to just sit on your hands. But what is interesting, again, on this zoomed in version, is how this low from the 23rd of March, so 7 o'clock on the 23rd of March in the evening, has held. So we traded down to 25.84. I mean, the volatility is crazy again. It rallies 100 points, 100 S&P points. And then, what's that, yesterday? Yeah, yesterday into the close yesterday. So the last hour of trading yesterday smashes back down to this level. And in the overnight market, we've seen a bounce. So again, I think if it came to a shorter term stop loss, if we're a buyer now, wherever it is, 26.22 and a bit, a shorter term stop loss, an obvious place to have it, is below that low from the 23rd of March, so below the 25.84 level. But if we get a rally today, again, the trade is maybe to be a seller up here within this downtrend. So I think it's really interesting at the moment. The big picture view, we're back, the dailies, we're back to what has been a big level following that massive sell-off in Feb. Short term though, it's still under some pressure. So I think we've got, as ever, interesting times in these US stock markets. But let's talk a bit more about trend, because people really do struggle to trade with the trend. I've worked in the spread betting and the CFD business for 14 years now, and you can almost guarantee if you have a strong trend in a market, most retail traders like me and you will be betting against that trend, and there were plenty of people, if we pick up just using our trend line here, all the way up from that, it was a shock move following the presidential election, because everyone thought, well, when Trump gets in, market's going to fall off, and it didn't. And we've just seen this market push higher, and all the way up, there were plenty of people just going short and just getting clobbered every week as the market ground higher. So what we've got to do is trade with the trend, and the easiest way of doing it, I think, is putting a trend line on a chart, because then it sort of slaps you in the face when you're looking at it. Well, which way is the trend? And the trend is clearly up. Arguably, you could say that trend on the S&P is still up, from the December 2016. So even though it's come off really heavily because it ran a long way away from the trend line, it's pushed through. We had incredibly volatile markets. But we've still got major higher highs and major higher lows. So for me, until and if 25.30 gets lost, that trend is still up. So the bias would still be to be a buyer of dips. Okay, so I think using trend lines is the easiest way of trading with trends. Yes, you can use things like moving averages is another classic trend following indicator, and they've got their place. But I would say you can't beat a simple trend line for giving you a slap in the face as to which way the trend is. So hopefully we have a bit of a volatile couple of days, but let's see. Let's see what happens. But for me, because we're back down to these Feb lows, I think it's an interesting one to look for a bounce in US markets off here. Let's take a look at the Dow. I think the Dow is maybe slightly different, but let's take a look. Actually, no, it's a similar thing. So here's the Dow Jones. So we got a similar setup. The Dow, Feb the 6th, trades as low as 23,100. Then has a massive rally, 2,600 point rally, up to 25.7. Sells off again over the last week, gets as low as 23,500. So comes within 400 points of those old lows, and 400 points with the volatility that we're seeing at the moment, isn't a lot. And again, we've seen it bounce. So again, arguably, we can see some base building here. The big level to watch on the Dow, let's round it up, 23,000 is the big level. I think if we lose that, the risk is we'll see this market under a bit more pressure. So it's really interesting. I do still think that stock markets are maybe the more interesting markets to watch at the moment. But saying that, oil's interesting. We'll come to oil at the end, but I think that's an interesting market as well at the moment. But stock markets, interesting, consider the moves. Let's have a look at the FTSE. Let's look at the DAX first, maybe the German DAX. German DAX always, I mean, the German DAX does follow what US markets are doing, but seem to follow it in a more excitable way. You know, we seem to have a lot more volatility in the DAX, even compared to what we've seen in US markets, and we've got the same thing going on. You know, we had the big sell-off on the DAX. The lows were 11,685. Then we have the low there, March the 5th, 11,731, and the low a couple of days ago, 11,708. So again, you know, big levels for the DAX. So these stock markets really are in bounce or bust territory down here. You know, but we're back to a zone that has provided big support. So it's a really interesting level to watch. And again, RSI is oversold. Arguably a bit of bullish divergence going on when the market slipped to a low, slipped a little bit lower here, but the RSI is just about making higher lows. So that does add to the bullish argument or the chances of a rally from here. So I'm guessing the FTSE is going to be the same, but saying that, the pound has been strong recently, and a strong pound, really, oh yeah, there we go. It really does affect the FTSE. So the FTSE has actually slipped below that low, and I do think that is the pound distorting it, because the pound's had a bit of a run, which we'll have a look at in a second. So the FTSE has slipped below that low. I mean, this for me is why if you were going to trade a stock market index, trade the US markets, the FTSE is just a little bit too erratic and too tied in with what's happening with sterling, because so many UK listed companies quote in a realize their profits in a currency other than the pounds, you know, so what the pound is doing has a big impact on what their P&L might look like. So the FTSE slipped below. So again, there's a bit of a messy one that the FTSE has slipped below the lows of 69.20. So it's traded as low as, I mean, it's had a bit of a move, 68.42. But again, you know, if we're going to see US markets recover, we'd expect the FTSE to be dragged higher. But I think, you know, the one stock market index to watch is the S&P 500 from here, because it's the broader US stock market. So it's really interesting, I think, down at these levels to see what happens. Let's take a look at some of the currencies. We've seen that the pound's had quite a bit of excitement over the last week, I think, as the Brexit negotiations, which are really exciting, roll on. You know, and we see maybe things being a bit more positive than we thought they would be. But just taking back our bigger picture, let me just flip this over to a weekly. I still think we are going to see further recovery in the pound from here. You know, we've got, if we go back to the March, there's our March trend. So again, going back to this whole trend thing, you know, that is the trend on the pound at the moment. And if we picked up on the old trend from up here, which looks something like that, you know, that has been broken. If we plonked our trend line in there, so we did have this old trend that had been in place pre-Brexit vote, so back to July 2014 with those highs. We've broken out of that. We broke out of that last year, end of last year, November, December last year, and we're still chugging merrily away. You know, so at the moment we've got trend line support coming in at 136-ish. The market's about 500 points above that. You know, so we are way above it. But again, any weakness looks like a buying opportunity. Let's take a look at the daily charts, because we have seen, you know, a bit of a move over the last week or so. I think what's interesting for me, let's just plonk our trend line on this daily chart as well. That trend is still up. That is an unarguable truth as far as I'm concerned. All right, the trend is still up, coming in about 136. So we should be treating big sell-offs in the pound, if they happen, as a buying opportunity at the moment. But what's interesting is it has, the last couple of days, it started running out of steam, and there are big levels up here. You know, we got big obstacles from earlier in the year, January. So the highs from Jan were 143.50-ish. 2 days ago, the market got as high as 142.50-ish. So came with 100 points to that high. So for me, I wouldn't be a buyer up here. So even though I think the market is going to move higher this year, I wouldn't be a buyer up at these levels. Maybe we're a bit overcooked. The RSI down here has been overbought. We also had, for fans of the candles, yesterday, let me just zoom in. Yesterday, so it's this red candle here that really probed lower but recovered during the day. We did have this setup here where you have the big up day the day before, then you have a day where the body of that candle, the red here, pushes through at least 50% of the previous day. That is known as dark cloud cover. So I think candlestick patterns, I do like them. I like the simple ones. So things like bullish and bearish engulfing, and this dark cloud cover thing. This is a bearish pattern. So it's not as bearish as if it had closed down here, but it's a negative pattern suggesting there's a little bit of indecision, bit of weakness creeping back into the market. So maybe over the next week or so, we'll see a bit of downward pressure on the pound. We know we've got big obstacles up here, big sellers left up here from Jan. So maybe we'll see the pound drift off. But again, if we drift off down to these levels from late Feb, it looks like a buying opportunity again. So I think in the short term, a bit of pressure, but longer term, that trend for the pound still definitely up. And clearly, I think the big level to watch, the breakout level, is 143.50. If we see a move through 143.50, it does suggest that maybe the next leg higher is starting. And what would we be looking at as targets? Probably this sort of area, 148. The highs post referendum night. I mean, referendum night went a little bit crazy, obviously, with the market punching out to 150 and then collapsing. So maybe 148. If we break these old 143.50 highs, 148 is the next level to watch pound US dollar. But I think in the short term, maybe we'll see a bit of pressure. I think what was interesting yesterday, I was on the train yesterday, so I didn't trade it, but I was watching it, which you don't make any money from watching it. What was interesting yesterday was the pressure it came under from yesterday morning. So yesterday morning, the market, this trend had continued. This is on an hourly chart now. The market had pushed as high as 142.45-ish, and then really sold off. These are hourly candles, so 1, 2, 3, 4, 5. So we have 5 hours of the market selling off. And what was interesting, again, going back to my favorite subject, big levels, there we go. So we had the old support left, about 140.75. The market, pound US dollar, about 1 o'clock, did push through that level. So traded as low as 140.66. So pushed about 10 points below that level. But we saw a really sharp turnaround. We had, on an hourly chart, bullish engulfing. So we had the market really turned around in that hour. So again, our Harry hindsight trade here would be, we had this ended up being a false breakout. So the market pushed below a big level. We didn't get the follow through. So that can be a suggestion. Okay, maybe this is a false break. Then we have this bullish engulfing thing on the hourlies. So the trade would have been be a buyer with the stop loss under the lows. And we did see the market manage to rally. Where did it go from? 41.10 up to 42. So we saw a 90-point move off that. So I think, again, if we saw it under pressure down below 140.100 the next day and a half, let's watch to see how it reacts down here, down in this 140.60, 140.80 sort of area. But I think that was interesting yesterday, that little false break we had. And I think false breaks are interesting, because we all know a break of support is traditionally negative. But if the market doesn't sell off, then maybe it's a low risk, high reward potential trade. There's, I suppose, a similar sort of setup back here, March the 16th, where the market had been holding ahead of 139 for a few days, slips down to 138.90, but then recovers really quickly. So again, if we're a buyer, we can whack a stop loss under there, thinking it's a false break. So I think false breaks are interesting because they can give us nice places to set the stop. And if the market does recover after the false break, potentially there's a lot of upside. So in the short term, maybe a bit of pound US dollar pressure, but medium term, long term, those big trends from more than a year now are still definitely up. Let's take a look at the euro. Euro, it's a bit boring, the euro. It's that was we sort of a big move, I think last Friday, beginning of the week. Oh, hang on, I've just lost my screen. No, it's back. Right, it was sort of big move beginning of the week when Asia opened, and I think that was a bit more US dollar weakness following this trade war potential stuff. but it's just a bit, it's dull. You know, we're really capped euro dollar by the old highs, 125.50, but we're also supported by the big lows down here, 121.50 and 122. If we look on an hourly chart, 122 has been quite a big level. So I think if you were trading it, here we go, and again a false break. So 122-ish was the level, 122.50, sorry, 122.50 had supported the market all the way through March. We had a little bit of a dribble below it, March the 20th, but again ended up being a false break and the market has recovered and we're sort of where we are now. So I think it's been, the volatility has been quite low. You have to be fairly nimble to trade it, but I think there have been opportunities and we've got definite levels to watch, but it's maybe just a little bit boring. But again, it's all about, about trading with the trend. I think in euro, if we looked at euro, we will go back to a weekly chart. I think we're arguably just about, yeah, we're still in that trend, aren't we? There we go. There's our euro dollar on a weekly candle. We are still in that trend, so again, trading with the trend, put the trend line on. It's a slap in the face to say, don't try and pick a top, a major top in euro dollar just yet, because the trend is still up, when we're underpinned by this 121.50 area. So let's see. I think we need a breakout in euro dollar. We either need to move through 125.50 or we need to break down below 121.50, and I think that will give us the next clues as to which the direction would be. I have to say, going completely against what I've said against trends, I think that the risk is we'll see the euro sell off. I think that maybe everyone's being a little bit too negative towards the US dollar. Let's see. So if I was a betting man, going completely against the fact the trend is up, my money would be on a 121.50 break. Okay, but we're not seeing anything like that yet. So let's see what happens with euro dollar. And just the last one on the currencies. Let's just have a quick look at euro sterling, because I think that is interesting. We've looked at this a bit. There we go. It's done the same thing again. Look at this, euro sterling. So euro against the pound has been boring. It's been stuck in a range since September, October last year. Okay, so we're up here about 0.9, so 90-ish, and then down here at the lows. It's not picking up my lines for some reason. Horizontal high and low. Down here about 0.87, and again last week ago, false break. Okay, so everyone knows that 87 has been the floor for the euro. 22nd of March, we get a break that takes it down. Oh, it doesn't. I mean, how far below does it actually go? Let's take a look. Let's pick up on that level. So it takes it down about 23 points below that level. But look how it recovers incredibly quickly. So for me at the moment, for my money, RSI has gone oversold. Do we rotate back up towards 90 again? Back to the top of that recent range. And again with euro sterling, we need a breakout either way. Once again, my money, because I think that the pessimism towards the pound has been overdone. And so far, at least, the Brexit discussions are going maybe not as terribly as people thought they might go. Maybe we'll see the euro break down and we'll see the pound continue to gain ground. But 0.8670 to 90 is the big one to watch, I think, on euro sterling. Okay, let's take a look at, I think, two other markets, which is boring, I think, and one of which is more interesting. Let's start off with the boring one. So this is gold. Gold, from a trend point of view, I think this has been a real tricky one, gold, because it's a right sod, I think, is the way of describing it, where we have trends that look like they're starting. This one back here. So this was 2016, so a couple of years ago. It looks like it's starting. Then it breaks out of the trend, and then it forms another trend, which looks something like that. And that one is still going, but then it accelerates and breaks out of that trend. So I think for me, the trend in gold is up. So I think we will see gold push higher, but it's just making pretty heavy going of it at the moment. Let's flip this over to a daily chart, because it's been, again, a bit like euro against the dollar. The last couple of months, it hasn't really moved, but we have had definite levels that we could trade off. The really big level, easy to remember, 1300. $1,300 an ounce. Whenever we've seen gold smash down towards or near 1,300, the buyers have come back in. You know, we had it here, where it got as low as what, 1307, here 1304, here again 1305, and on the upside, on the upside up here, it can't make any progress past sort of 1367 sort of area. So we're trapped in this definite band. And again, we need a breakout. You know, we need a breakout on gold. But at the moment, buyer down here, seller up here, and it's just chopping around in this sideways range. The interesting market, I think the interesting one, and I haven't seen that much coverage of it, is the price of oil. We can't, unfortunately, we don't have a massive long-term chart here. Let me have a look at Brent crude. Oh, here we go. This is better. This is better. So let's look at the UK flavour of oil. So since the summer of last year, the price of oil is up by about 50%. Okay, so we've gone from about 42 as high as wherever we are now, $70 a barrel, near enough, in the Brent May contract. So what's interesting is that we're back up, or we have nudged through these old highs for the price of oil. You know, so these are the old highs back in Jan. Oh, it's had just the smallest of looks through that level. The trend line broke. This is another interesting thing about trends, I think. Just because trend lines break doesn't mean the trend is definitely over. You know, for me, my reference point would always be the previous major lows. So the price of oil, the US version and the UK version, has held above these old lows. So these are the big ones, I think, December lows. So it's about what, $61 a barrel for the UK flavour of oil. So Brent crude has pushed up. We've had a look through, but we haven't had the follow through. So again, if you really thought that oil was overvalued up here, we've got over the last 2 or 3 days a false break. So you could be a seller at wherever it is now, 16,982, stop loss above that high. You know, taking the view that if the market, well, if it does punch above 71, you're wrong, and the market's going to take off. But if we pull back into the old range, you know, you've got $7 potential profit if you're short, and only $1.50 risk if you're wrong. So I think it's interesting. It is going against the trend, which does go against the theme of today's webinar. But because we have had a poke through there and no follow through, you know, maybe we'll see oil rotate its way back to the mid 60s, which again looks like another buying opportunity. So I think oil is a really interesting one. Tying up with the argument for maybe being a little bit short up here on oil is the fact that we have gone overbought on the RSIs on this move as well. So you know, we've poked through. We haven't seen a follow through. The market's retreated pretty quickly from these old highs. So I think it is an interesting one. So in the short term, a bit like the pound, I suppose. In the short term, maybe we see oil under a little bit of pressure. But medium term, that big trend for oil is still most definitely up. So I think that's an interesting market to keep an eye on. That's it. We'll start wrapping it up there. So like I say, the next couple of days could be a bit boring because we're heading into Easter. Stock market's the interesting one because we're back to the Feb lows, big lows. Market really should rally from here if that trend is going to stay intact. So I think it's an interesting one from here. If we lose those February lows, it really could be a case of you know, look out below, as we see a bit, you know, quite a bit more selling pressure build up. But for now, be expecting it to bounce. And oil, I think, is the other interesting one because we're flirting with the highs from earlier this year, but so far haven't managed to crack them properly. So arguably a little bit counter trend trade there, but maybe a short-term short on oil, assuming that it's not going to crack the $71 a barrel level. So let's see. I think plenty to be keeping an eye on, but we'll wrap things up there. Thanks for coming along as usual. Enjoy your Easter. We'll do it all again next Wednesday and see what's happened with all these markets. But we'll wrap it up there, and I'll let you get back to the rest of your afternoon.